Hey, good afternoon, everyone, and thank you for joining this week's live walkthrough and Q&A session. My name is Dan. I'm a Senior Customer Success Specialist here at Snap, and today we'll be reviewing the client reports and presenting the client reports. Now, if you do have any questions during the presentation, please feel free to submit them within your Zoom. You should have a Q&A box that you can submit your questions to. If by chance I'm not able to get to them during the presentation, just be assured that I will follow up with you uh, later this afternoon, and I will send you an answer to your email. So in regards to the agenda, there's different ways that you can present your plans to your clients. So we can use the planning pages. We can use the charts that are accessed from the planning pages. There's comparing scenarios. There's the full PDF report or snapshot that you can use, as well as you can Excel to export. Export to Excel. And this is going to be based on a few different things. So the complexity of the report, how much detail will your client want to see? If it is more involved, perhaps that would make more sense to go into further detail. The client interest. So again, depending on your client, do they want to see a full report? Do they want a shorter version of it? The goal of the meeting, it might be specific to one thing, or it might be more holistic. And then just your comfort level with Snap itself, like how comfortable are you in presenting this? Like, so for example, can you make the changes on the planning pages and have your client with you? It can be pretty impactful on how quickly you can update Snap and see the results. So there's not one cookie cutter way, I would say, of going about on how to present your report. There's different aspects to consider. So I'm going to hop over into uh, the sample client that we're going to be using today. So in this example, we're going to be working with our clients, Brenda and Paul Gill. And I'm going to quickly go through scenario setup. So the initial stage of when you're working through a client. Um, I won't go into a lot of detail here, but we do have on our client section the name, province of residence as well. That's pretty standard. You can switch between the different modules here by clicking to next or clicking up here and moving or navigating around here. So on our general tab here, I have the plan starting in 2025. I have the retirement age set at 60 for each of them, and we're going to run the plan until age 100. Now I have used our defaults for inflation for CPP and OAS and general inflation at 2.1. This has been recommended by FP Canada itself, so I haven't changed anything there. Now I have adjusted the defaults for rates of return for each of the asset classes. Again, the defaults will be FP Canada's recommendations. I've adjusted them down to account for any fees. So what's being recommended by FP Canada is gross, and I've netted them out to account for my fees. Now, under expenses, so for the base expenses of 84,000, this is what the client intends to spend at retirement, net of taxes. And then I've also included a additional travel expense that's going to run from 60 to 69 each year uh, uh, for vacation in the amount of $10,000. But go down to incomes. Keep in mind, right now I'm on Brenda's tab, and that's indicated here by the dark blue, as well as here in brackets. So she has employment income of 120,000. It's taxable, of course, and RSP eligible, and it's going to run up until the last year before retirement at age 59. We have her retiring at age 60. And I've also included a defined benefit pension plan. We're going to start that at 60 with the amount of 35,000, the survivorship percentage, and then we also have a from age 65. So why we have before and from is this accounts for any bridge benefit that may be applied to that defined benefit pension plan. And then once the CPP were to start at age 65, the bridge benefit may fall off, and we have the option to include the new amount here. Now for Paul, I've included his employment income as well, again, running up until the year before retirement. He has no pension. In regards to assets, again, under Paul currently, so we have a joint account between the two of them, an RSP and a TFSA. We also have included a home, which is joint. Now, if we tab over to the TFSA section, we're assuming that he is caught up on his TFSA contribution. So his allowed room for 2025 would just be the standard 7,000. If there was any unused room, we could update that value here. And in regards to a recent feature that we've released, I've checked off that any non-reg assets can be used automatically to contribute to the TFSA. So that will automatically now be moved from non-reg over into the TFSA without you having to manually enter those contributions. I'll go over to Brenda as well, and you can see here I've included that joint account, which will copy over from Paul, her RSP and her TFSA. And again, because this is a joint asset, the home is also reflected. In regards to debts, we have a mortgage, a small balance with the interest rate, the monthly payment. I've indicated that it is a joint debt. And then I've also linked it to the home. So why this is important is if we go over to assets, if I were to sell the home in the projection, which I'm not, I'm assuming that they're just going to hold on to this home for the life of the plan. But if they were to sell it at a future date, and this home was not linked to, or sorry, the debt was not linked to the home, once the home is sold, this mortgage would not be paid off. But now that it's linked, once the home is paid off, the proceeds will be used to pay off any debt. In regards to government benefits, I've indicated that they're going to take CPP and OAS at age 70. I'm assuming 75% of the maximum for Brenda, 100% for OAS. And for Paul, I'm assuming 70% of the maximum and 100% of the OAS. Now, they don't have any insurance policies to enter, but if they did, you could include the life, disability, and critical illness. They have no children, so there is nothing to add under the RESP, but that is an option for your clients as well. So I'm going to hop over now into the second stage here of the planning pages. And here you can see right now I'm on Paul's individual view. So there's a single view for each of the clients as well as a combined. So I'm going to hop over into the combined view. There we go. And just quickly, what's happening on this combined view, I just want to highlight what's happening before for those first few years before retirement and versus after retirement at the start of age 60. So what the clients are, or what this is illustrating, sorry, is it's taking the employment income of the clients before retirement, and this is a combined view again. You can expand this out by clicking on the arrow, and it would have each of their incomes laid out for you, and then you can collapse that again. So it's taking their incomes less any taxes and premiums. Again, if we expand this out, we can see the CPP due and the total tax that is due. So income less taxes and deductions, less any savings that I'll get to in a second. So for example, for the TFSA, I'm making contributions. Again, this is combined between the two of them and the RSP, and then less any debts, so that mortgage that we had entered. So what's left over at the end of the year in 2025 is 97,708, and that's assumed to be spent on their lifestyle. And then that goes on for a few years prior to retirement. Once retirement starts, we refer to this as the cash flow management being enabled. And what Snap will now do is take our base expense of 84,000, which is in today's dollars. What they would actually be spending is the 89,404 plus that vacation expense of 10,000 that we indexed out. And then Snap is now taking money out of the financial assets. So in this case, the non-registered portfolio, as well as, no, just the non-reg, I'm sorry, and the pension income coming in to ensure not just that the lifestyle expenses are being covered, but our additional expenses, the taxes payable as well, and then the mortgage being paid off in this final year of retirement. So Snap, again, is doing kind of the heavy lifting for you, letting you know what would need to come out in order to meet the expenses and any other obligations. So if we scroll to the bottom of here, and I go over to the financial assets, so there is no shortfall in this plan. They're able to fund that 84,000 lifestyle and cover any other obligations. If we go over and look at the estate before tax, we have an individual view as well as a combined view. So it's taking their financial assets in the last year of the plan, plus their real estate for a total asset, and then the estate before tax, less any tax on estate, which would be attributed to any capital gains triggered on a non-reg portfolio or any income from a RIF account to come out to the final estate after tax. So this is something that, again, if you're comfortable with, this is something you can show your clients directly in a meeting. Now, the other thing that I want to touch on is the contributions that I've entered. So contributions are done on the individual's uh, planning page. So here you can see for Brenda, for example, these cells are highlighted in yellow. So that's just indicating that's something that I've input. So it stands out to me that it's an edit that I've made. It's not something that Snap is automatically doing. And I've included a $5,000 contribution for her RSP and a $7,000 contribution for her TFSA. Now, if I wanted to change this, it's quite simple. You can click on the initial 5,000 here. If I want to increase that, say, to 6,000, I could change that for one given year and hit the check mark. Or I could, for example, include 6,000 and copy it down for a couple years here, and it would update each of those cells. You're going to notice that run scenario has now turned yellow, just indicating that the plan needs to be refreshed. So I'm going to do that. Now that that's been done, you can see the 6,000 is the new contribution amount. If I wanted to say remove those contributions, I could click on the X's here, which would remove the individual override, or I can click on the 6,000. I can copy it down to 59 and I can say clear override and hit the check mark. Those the yellow cells have been removed. And again, I'm going to run the scenario. And you can now see those have been removed from the projection. And I'll quickly just add them back. So again, a great way that you can be in a meeting with your client, make changes to the plan quite quickly, and see the impact of those results. So I'm going to now hop into our charts. on the planning pages here. Right now, again, I'm under Brenda, so I'm going to go to a combined view. And I'm going to go over to our charts. And here you can quickly see outflows, inflows, net worth. So our outflow chart here, again, on a combined view, is showing what is going out of the plan. So starting with base expenses here. So again, what's being spent or assumed to be spent after taxes and debt payments and other obligations have been paid, any income tax due, any debt payments due, and then any outflows, so to the savings account. So that would be any savings that we've included to go back to the RSP contributions and TFSAs that I indicated for Brenda. And then starting at retirement, indicated by the R, you can then see our new base expense amount going out. And then our additional expense, for example, if we hover over our titles here, so our additional expense, that being the vacation that we included, is highlighted. You can also exclude these from the chart by clicking, and that removes them. So if you want to highlight something specific, like our base expenses, you can do so by doing that, and we can add those back in. And then we have the inflow line, just indicating that all the outflows are being met by the inflows, which is here. So again, at the beginning of the projection, we have their employment income, retirement starts. So what's coming in to fund the expenses and outflows. So here we can see the non-reg portfolio mixed with pension income. And then moving on, we finally get into RSPs, CPP and OAS. And again, if you want to highlight specifically what's coming in, you can just hover or click to remove them. And then finally, the tax paid over the life of the plan. Now moving down to the net worth. So we have what the estate is made up of. So the financial assets, the real assets, if the clients had any insurance like cash surrender value, the corporations, they are all broken down here. And again, going for the life of the plan. You can also see this in real dollars or any of these charts in real dollars. So if we wanted to illustrate that, we would click off real dollars. And then finally, what is the asset allocation? So we have the real estate, the equity portion of the portfolio, as well as fixed income. Before I move on, sorry, the menu item here. So you have the option of viewing this in full screen or downloading these specific images. Another way that I would say is pretty impactful, especially if you have multiple scenarios. So we always recommend that you make your kind of status quo plan, and then any recommendations or changes that you make to the plan, that you make an additional copy of it. So you can do that by going up to the menu item here and copying the plan. So I'll do that. And let's say in this example that we want to increase the spending from the 84,000 up to, let's say, 100,000. So you can see here my new copy, base scenario copy. You can rename the scenario by clicking that menu item again and clicking on rename. You can also click right on the title of the scenario. And let's say increased spending. Let's say 99,000. So you can see the title has now been changed. I'm going to go down and click right on our base expense of 84,000, and let's update that to 99. And let's copy that down for the life of the plan. You can see it's now been updated. However, we just need to run that scenario. And again, these are changes you can make right on our planning pages and have your client with you and see the impact. So we can see in this example, we actually do run into a shortfall in the projection indicated by the red or pink rows, just meaning all financial assets have been depleted at that point. There's nothing left to fund that level of spending. So that's what would take me over to our recommendations feature. So there's a few things to go over here. So if we go up to recommendations, we can see our retirement goal. So again, retirement age, the level of spending, and the goal status is underfunded, the amount, and the goal progress. So these recommendations would help us bridge that gap on starting with retirement age, what the client would need to take out, or I'm sorry, postpone their retirement from 60. So if we hit calculate on that, it will take a few seconds here, but it will push out their retirement age from 60 to a new age that they could realistically retire and be able to spend the 99,000 and have this 100% funded. And so the answer here is 62. So they would need to push retirement by 2 years. Sustainable spending, so that's going to let us know what is the maximum level of spending that the client can do year over year for the life of the plan and not run out of money and have assets drawn down to zero. You can see here that the ages are in blue, so I'm going to calculate from 60 what is a realistic number. And here we can see, so that new number would be 89,695, which is 9,305 less than our current 99,000. But again, this is starting to run that sustainable spending at age 60. But let's assume our clients want to spend that 99,000 for the first 9 or 10 years. So we can actually update when we run the sustainable spending from. It doesn't have to be from our retirement age or when the CFM cash flow management begins. So in this case, let's say we want to run it from age 70. It updates for Paul as well, and I can recalculate that. And here's our new number. So from age 70, they would have to drop their spending from the 99,000 down to 85, which is 13,640 left. So before I apply and run that recommendation, you can see down here that there's a copy scenario option, which is what we typically recommend that you do, because once you apply and run these recommendations, it's not easy to revert back to the original plan. So I'm going to check off the copy scenario and I'm going to apply and run it. So here we can see that the 99,000 is continuing on until age 70, at which point we have our new sustainable spending figure. And if we scroll to the bottom of the plan, there is no shortfall. We can see that all assets are basically drawn down to zero. So if we go over to our estate before tax, we can see here the financial assets again are drawn down. All that's left over is the real assets, their home. So the sustainable spending calculation won't assume that the home needs to be sold. It will keep the home, and that makes up the estate after tax. And then you can also see that in real dollars as well. From the planning pages, now that I've made a couple different scenarios, another thing that you could, again, do in your meeting or even print off for a future meeting is comparing scenarios side by side. So if we come up here and use the menu item and compare scenarios, I'll select our base scenario, and let's assume the sustainable spending scenario, and I'm going to compare those. It pulls up the scenario, so our base and our second scenario, and the difference between the two. And then over here is the different metrics, which is comparing them side by side. So here our goal progress based on our base scenario versus our increased spending and sustainable spending recommendation. We can see now the difference. You can see the retirement spending over the life of the plan, the lifetime expenses, lifetime personal tax, and then finally down to the assets, we can see financial assets, the difference. So in our increased spending scenario, they ran out of money. So obviously this is going to be zero versus our original scenario and the difference there. And then again, the estate after tax and the difference between the two. So pretty powerful tool to use. Right now, this isn't a great example, but for example, if you wanted to compare what's the optimal time for my clients to take CPP, let's assume status quo, age 65, but I want to see what things look like at if they were to take it at age 70. And then you could compare those metrics, lifetime personal tax, for example, the impact it would have on the government benefits, if there's any OAS clawback, and then the impact on financial assets. So again, a pretty powerful tool to find an optimal solution for your client. Right now, it's running it from the beginning of the plan to the end of the plan. However, you are able to pick a specific point in time. So if I wanted to compare, if we only ran this up to age 80, I'll hit save, and then these metrics would be updated. I'll leave that back at the end of the plan. If we go over to trends, so this provides you a different visual for your clients. So this would compare, again, the projections side by side that you've selected, but on a line graph form. And again, you can go to each year and see what the difference would be. And again, the different metrics here being base expenses, personal tax, corporate tax, government benefits, personal estate. So again, a great visual for your clients and to see the impact that any recommendations have on a projection. So I'll close out of that. Now, the other option here is exporting your projection into an Excel document. So if I were to export, it would save it to my computer. Once that's been done, you can download it. And then once that's done, I'm just going to pull up the actual Excel document here. So here you can see it's pretty much the planning pages, just in an Excel form. So down here, you can see this is Brenda's view, just like individual views are possible within Snap. You also have a combined view, and you can also see the corporation that I had included as well. And I'm just going to hop back into Snap. And then finally, we can hop over into our client report. I might have to, I think this might be a little bit of a glitch. Just bear with me for 1 second. I'm just going to shrink this down. And let's blow that back up. There we go. Okay, so within the client report, I won't make too many edits to it. Let's just assume that you've made all your edits. So starting with how to build the report itself, there's a couple different ways you can go about that. If I go over to Report Builder, You can see here under included pages is every single page available in the report itself. And it's a click and drag system. So if I wanted to remove any pages, I could click on the page and drag it over into our gallery here, and it would remove that page. And you can see here, it's available. Anything crossed out is just letting you know that it's already been included as part of the report. If I wanted to add that back in, I can do so by just, again, clicking and dragging from the gallery over into the center here. You can also reorder the pages using that method. So if I wanted to move this up or down, you do have that option. If I wanted to say start from scratch and remove all pages, I could click on the first page, scroll down to the bottom here. I'm going to hold my shift key and click on this page and hit delete. And again, all pages are now available to be added back into the report. You can see over here, there are shortcuts for adding all pages in. So if I hit AA, it's going to add all those pages back into the report. The other method is to disable the pages. So if I were to do that, and then hop over into Report Editor, you're going to see all the pages on the left here. They're checked off, just indicating again that they're currently being included as part of the report. But now I can actually click on a page and see exactly what it would look like within the report itself. Again, in the chart formats, for example, if you wanted to remove any of these items, you could click on it and it would remove it as part of the chart. You can show that in real dollars. And if I say wanted to remove the page itself, I would just hit the check mark here. And that removes the page. Again, depending on how detailed you want this to be, because of right now, looking at this may look like a 30-page report based on how much detail and input you've put into it. So you're going to see here, there's individual page views for cash inflow, cash flow here, net worth as well. So to shorten the report pretty quickly, you could get rid of the individual views for the clients. Typically, they would want to see a combined view. Again, that's going to be very case by case basis, but that's one way that you could shorten down the amount of pages within the report itself. Another thing that you're going to notice on a lot of these pages is a comment section. So this is where you can go in and highlight anything that you want to address on that specific page. So you don't forget it and you can bring that in to the meeting. Now I'm going to hop back over into Report Builder. I'm going to enable our pages again. So anything that you had previously done in that list will now be reflected here. And at that point, again, you can reorder the pages by clicking and dragging. Another thing to point out is our snapshots only. So again, if a client does not want a lot of detail, for example, or maybe the plan's in the initial stages and you just want a very high level view of how things look, you can quickly filter out the snapshots only cards. So there are multiple cards on a 2 or 3 page document. So you can see here, all the other pages have been grayed out. It's just our snapshot cards that are available. So if I go to Report Preview, which will preview what you've done so far to your report. So here's our snapshots. Again, a goal summary, assumption summary with inflation, rates of return. We have our net worth summary, our expense summary, and on the second page, a net worth and retirement income summary, and then finally an estate summary. So again, very high level, doesn't go into a ton of detail like the other reports do, or the other pages, I'm sorry. So I'm gonna go back into my report editor. So here you can see all the pages that are currently included in my report. You can click on each of these pages and make any edits that you see as well. Under Report Builder, there's a few more items to cover. So I'm going to add back all the pages. I'm going to click No Filter. So all of our pages are added back in. You do have the option of adding custom pages. So if I click on this, you can add a custom page, and let's call this Sale of Home. I'll now go back into my included pages. It will be now part of the report within here. If I scroll down, we can now see Sale of Home here. So it's included here. If I go back into Report Editor and I scroll down, we have that page here. And at that point, you can include any text that you want to address to that specific page. So for now, I'm going to go back to Report Builder. I'm going to go back into my custom pages and just remove that. And then there's a couple more settings here. So we have some header settings, so you can address the page number, the prepared for and prepared by. Any custom text you can include here, as well as the print settings. So this would be changing the font size, the margins of the report itself, the paper size, and the orientation. So once you've gone through that, and you want to, again, you can preview it, but if you're wanting to generate that PDF, it's just over here on the right. So you could generate that PDF, print it off, or save it to the client soft file as well. So if I download that, it downloads to your files, and you can, again, save it to the client soft file. Going through that report itself, I know we've covered a lot of the pages already. Let's get rid of this if we can. Doesn't look like I am able to. So going down again, we have our snapshot cards. We have our assumption details. So this is going to further detail than the snapshots in regards to inflation, the client's information, where they reside, the level of benefits that they may receive. We have our cash outflow chart, which we've touched on. Cash out inflow details. So this will be what's coming in, but in a table format for the life of the plan. And then this is what I was referring to by individual views. So this would just be pertaining to Brenda. So if that's something that you don't think is beneficial, again, this is taking up, it looks like 2 or 3 pages, and then it does the same for Paul. So again, to shorten your report, that is an option for you. The cash flow projection. So this is very reflective of what the planning pages is. So it has not just the inflows, but also the outflows, so the expenses and what's coming out to meet those. And again, an individual view. We have our net worth chart, a table format of that, individual views of the net worth. We have a net worth summary, so what things look like today, our asset allocation, the estate details at the end of the projection. I have some corporate, or I've added a corporation, so that is now being included for cash flow and net worth. And that's the end of the report. So that's what I wanted to go over today. Again, I think I saw someone's hand up. So if there are questions, I will get back to you by the end of today. I'll take a look at anything that's may have come in. So that will be in the next few hours. But again, if you do have any other questions, even not related to what we went over today, This is where I recommend that you use our help center here. So once you log in, you can find the help center. You can find some great articles, videos, live recordings like this one that walk you through step by step on how to model something specific for your client. In the event that you're not able to find that article or video, or you just prefer to talk to someone live, this is the number at the top of the help center that I highly recommend that you use. We're definitely here to help out. We're here Monday to Friday, 9 to 6 Eastern Standard Time. You can also send us an email on the contact. We try to get back to everybody within a 2-hour window. So if we don't pick up the phone, please leave a voicemail, and our team is more than happy to follow up with you to address any hurdles or issues with modeling. With that being said, again, I'll let you get back to your day. I appreciate you joining, and perhaps I'll see you at the next session. Take care, everyone.